All right. Hey, everyone, and welcome back to another deep dive with yours truly. You know how we do things here? We take a recent episode from a show that's relevant to all of us and kind of break it down, see what we can learn from it.
Pull out those key insights.
Yeah. So today we're going to be looking at a recent episode of the Blockchain DXB podcast.
Oh, nice.
Yeah. This one had a ton of stuff packed into it. We're going to be talking about Bitcoin, inflation, a little bit of AI, even some stuff about Dubai.
Well, that sounds like a lot to unpack.
It is. It is. But luckily, I have you here to help me kind of, figure it all out.
Happy to help.
So let's just dive right in, huh? First up, this whole thing about the CPI numbers.
Oh, yeah.
Everyone seems to be a little bit on edge about it, waiting for the other shoe to drop.
Yeah, this is a big deal.
It is a big deal.
Yeah.
But our source mentioned that, some traders might be trying to manipulate the market, ahead of this CPI release.
Mm-hmm.
So what's the deal with that? What are they trying to do?
Well, these big players, right? Sometimes they call them whales in the market.
Okay.
They can really, make some big moves with their buying and selling power. Think of them as like the big fish in a small pond.
Right.
So they might try to, stir things up a bit, create some chaos.
So they can buy low and sell high. Is that the strategy here?
That's often the game.
Okay.
They might, spread some rumors, or they might play some really big trades to kind of spook other investors, drive that price down.
And then they come in and buy it all up.
Exactly. They swoop in and buy that Bitcoin at a discount.
Yeah.
It's all about psychology, exploiting how people react to fear and uncertainty.
Man, that's pretty sneaky.
Yeah, it can be a bit ruthless.
So, but why all the focus on the CPI? What makes that so important?
Okay, so the CPI, or the Consumer Price Index, it measures inflation.
Mm-hmm.
Basically, how much the prices of, everyday things have gone up.
Right.
And the Bureau of Labor Statistics, they release these numbers every month.
Oh.
And these numbers, they can really make the markets go haywire. It's like a monthly report card for the entire economy,
So basically, these traders are trying to guess how the market will react.
Exactly.
So if they think it's going to be bad news.
They'll try to get a head start on the panic.
And if they think it's going to be good.
Party time.
Okay.
Yeah.
I got it. But okay, so high inflation, that usually means that the Fed, right.
Federal Reserve, yeah.
Yeah, the folks that control the interest rates, they might try to, step in and cool things down.
Right.
But why would that make investors nervous?
Well, because when the Fed starts raising interest rates, it becomes more appealing to hold on to more traditional assets, like bonds. They're seen as safer bets.
Oh, I see.
So the money starts flowing out of the riskier investments. Things like, you guessed it, Bitcoin.
So it's like a domino effect.
It's all connected.
Inflation data, interest rates, how investors behave, it all plays a part.
It does. That's why the crypto market can be such a roller coaster.
Yeah, no kidding. Okay, so speaking of big names, our source also talked about Jerome Powell.
The Fed chair?
Yeah, exactly.
Yeah.
Republican, known Trump supporter, and pretty outspoken about digital currencies.
Mm-hmm.
Our source mentioned some drama, a while back about Powell potentially quitting under Trump.
Oh, yeah. The media had a field day with that one.
Did they?
Oh, yeah. They made it sound like this huge clash of the titans,
Like a showdown.
Yeah, but the truth is, as always, a little more complicated.
Okay.
Powell's actually aligned with Trump on a lot of issues.
Okay, so not as much drama as the media made it out to be.
Well, there's always some drama in Washington.
That's fair.
But, their relationship wasn't as contentious as some made it seem.
Okay. But then there was that Senate Banking Committee hearing where Powell basically said, no way, to a central bank digital currency.
CBDC.
Yeah, right. And he said that even when a Republican senator pushed him on it.
That was a pretty big moment.
Was it?
Yeah, it was a clear signal that the U.S. government, at least under Powell, isn't really interested in a digital dollar that's, controlled by the central bank.
So no digital dollar anytime soon.
It's not looking likely.
Okay. But here's something I found interesting. Powell seems surprisingly open to regulating stablecoins.
Oh, that's right.
Yeah.
You wouldn't really expect that from someone who's not a big fan of government intervention, right?
No, not really.
But I think he recognizes that stablecoins are becoming more and more influential. So he's probably trying to balance, fostering innovation with protecting consumers.
It's a tricky balance for sure.
Yeah.
So speaking of balancing acts, let's talk about ETFs.
Those baskets of assets that people invest in.
Right. We already have, Bitcoin and Ethereum ETFs.
Mm-hmm.
But get this. BlackRock and VanEck, Some pretty big names in finance.
Oh yeah, big players.
Yeah, they've filed applications for Solana ETFs.
Solana's having a moment, isn't it?
It really is. So what does this mean? Like, what happens next?
Well, they've officially entered the SEC's 21-day public comment period. So basically, the public gets to weigh in before the SEC makes a decision on whether or not to approve these ETFs.
Oh, okay. And then after that?
The SEC has about 6 months to make a call.
6 months, okay. So this could be huge for Solana, especially with companies like BlackRock, backing it. Does this mean crypto is becoming more mainstream? I mean, isn't the whole point of crypto to be decentralized? Cut out the middleman.
You've hit on a key tension within the crypto community. ETFs could definitely bring more mainstream adoption, make it easier for everyday investors to get involved.
Right.
But some argue that it goes against the whole, anti-establishment spirit of crypto.
So it's like a double-edged sword.
Yeah, it's a debate that's just getting started.
Okay. And speaking of debates, our source also talked about how some countries are really embracing Bitcoin, while others are, totally against it.
Oh, yeah. The Czech Republic is going all in on Bitcoin. They're putting, $7 billion into reserves. Meanwhile, Poland is nope, not interested.
So what's with that?
It's fascinating, isn't it?
Yeah.
You see, central banks, they tend to be pretty skeptical of Bitcoin.
Yeah, they like control.
They do. They like stability. But politicians, especially those leaning more to the right, they often see Bitcoin differently.
How so?
They see it as a challenge to the established financial order, a way to attract investment, and a symbol of economic freedom.
It's like a power struggle playing out on a global scale.
Yeah, it really is. And Bitcoin is right in the middle of it.
So things could get really interesting as more countries weigh in.
Oh, absolutely. This debate is just heating up.
Well, let's switch gears for a second and head over to Dubai.
Okay.
Our source says that it's buzzing with activity, especially when it comes to AI and Bitcoin mining.
Dubai is really positioning itself as this global hub for innovation.
They are, aren't they?
They're not just dipping their toes in the water, they're diving right in.
Well, take, for instance, the Dubai Future Foundation and IBM. They're teaming up to create a global AI hub.
That's a pretty powerful partnership.
Right.
What are they planning?
Well, they're talking about creating an AI innovation center, boosting their cloud services, and even launching a whole Dubai AI week to attract the best and brightest minds.
Wow, they're really going for it.
They are. And their goal, from what I understand, is to make Dubai one of the top 3 global cities. Ambitious, right?
They're not messing around.
Nope. But wait, there's more. 2 companies, Carib and Pantheon, are also partnering up to build Bitcoin mining data centers across the GCC region.
The Gulf Cooperation Council. A bunch of countries in the Arabian Peninsula.
Yeah, exactly. So what does all this mean? Why is this such a big deal?
This is huge. The GCC has tons of energy resources, which is perfect for Bitcoin mining. And they have regulations that are actually pretty friendly towards miners.
So they're creating a really attractive environment for these companies.
Oh, yeah. They're rolling out the red carpet. They're not just jumping on the crypto bandwagon. They're building the infrastructure to support it for the long haul.
So it sounds like Dubai is really going all in on this whole Bitcoin thing.
Absolutely. They're betting on the future.
They're really putting their money where their mouth is, huh?
Yeah, it's pretty impressive. And speaking of putting your money where your mouth is, let's go back to those traders we were talking about, those whales who might be trying to manipulate Bitcoin prices. How do they actually do that? Is it all about creating panic? Or are there other tricks up their sleeves?
Yeah, that's what I'm wondering, too. Like, how does that work?
Well, creating panic is one way, as we talked about, spreading rumors or making big trades to spook other investors.
Right.
But there are other more subtle methods as well.
Like what?
Well, for example, they might engage in something called wash trading.
Wash trading?
Yeah. It's basically where they buy and sell the same asset repeatedly to create this illusion of high trading volume.
So it looks like there's a lot of activity and excitement around the asset.
Exactly. It's all about creating a false sense of momentum to push the price in a certain direction.
Wow, that's kind of messed up.
It can be. It's all about exploiting market psychology.
Okay, well, speaking of big players in the market, our source also mentioned something called decentralized finance, or DeFi. They said the volume should be way higher than it is now. What's the deal with that? What exactly is DeFi? And why is volume so crucial?
DeFi is really interesting. It's basically using blockchain technology to create financial applications that cut out the traditional middlemen like banks.
So you're saying, like, you could get a loan or trade stocks without ever involving a bank?
Exactly. Think lending, borrowing, trading, even insurance, all happening on a decentralized platform.
That's kind of mind-blowing.
It is. And many believe that DeFi has the potential to completely transform the financial industry as we know it. But it's still early days. Adoption is lagging.
So that's why volume is so important.
Yeah. The more people using these DeFi applications, the more robust and valuable the ecosystem becomes.
It's like a network effect, right? The more people participate, the stronger the network gets.
Exactly. But speaking of networks, let's circle back to Jerome Powell for a moment. He was pretty adamant about not wanting a central bank digital currency. But our source mentioned something called FedNow. Some people think it's a sneaky way to introduce a CBDC after all. What's the real story there?
Yeah, I'm a little confused about that too.
That's a pretty common misconception. FedNow is actually a new instant payment system that the Federal Reserve is developing.
So it's not a digital dollar.
Nope. It's designed to speed up transactions between banks. So it'll be easier for people and businesses to send and receive money quickly.
So it's more about efficiency than control.
Exactly. Improving the existing infrastructure, not replacing it with a centralized digital currency controlled by the government.
Okay, that makes more sense. But while we're on the topic of Powell and digital currencies, I'm still curious about his stance on stablecoins. He seemed pretty open to regulating them. What do you think that is?
Well, stablecoins have really taken off lately.
They have.
They're designed to be pegged to a stable asset, like the US dollar, which makes them less volatile than other cryptocurrencies. But there are concerns about transparency, reserves, what happens if a major stablecoin fails.
Right. Could be a systemic risk.
Exactly. So regulators are trying to walk this tightrope between encouraging innovation and protecting consumers.
It's a tough balance to strike.
It is.
Do you think Powell is handling it well?
Well, his comments suggest that he's willing to find that sweet spot.
Between regulation and innovation.
Right. Which could be good for the stablecoin industry in the long run. But some people argue that, especially when it comes to algorithmic stablecoins, there shouldn't be any regulation at all.
Our source mentioned those too. They said they shouldn't be regulated. What makes them different from the stablecoins that are pegged to fiat currencies?
Unlike those stablecoins, algorithmic stablecoins maintain their peg through, algorithms and smart contracts.
Okay. More technical then.
Yeah, they are more complex. And, some would argue riskier, especially after what happened with Terra Luna.
That whole thing was a mess. Really shook people's confidence in those types of stablecoins.
Absolutely. But those who oppose regulation say that it could stifle innovation in this area of DeFi, which is still developing.
It's a tough call for sure.
It is. There are valid points on both sides.
Okay, well, speaking of debates, the one about Bitcoin as a reserve asset is really heating up. The Czech Republic's stocking up while Poland wants nothing to do with it. Our source made it seem like it's mostly a political divide. Right-leaning politicians are embracing Bitcoin while central bankers remain skeptical. What do you think about that?
I think that's a pretty accurate assessment. Central bankers, by their very nature, are risk-averse.
They like to play it safe.
They do. They value stability and control. And Bitcoin, with its volatility and decentralized nature, really challenges those principles.
But for politicians, especially those who are running on a more populist, make my country great again type of platform,
Bitcoin represents something different.
it's a symbol of disruption, a way to challenge the established order.
Exactly. It could be a way to attract investment and promote economic freedom, at least from their perspective. And it's a narrative that resonates with a certain segment of the population.
So we're seeing this clash of ideologies playing out on a global scale. Countries are choosing sides in this Bitcoin debate. What do you think are some of the potential consequences of this divide, both for the crypto world and the global financial system as a whole?
That's the big question, isn't it? The decisions that are being made today could have a huge impact on the future of finance and geopolitics. We're potentially talking about a shift in power, a reimagining of the global financial system as we know it.
It's a lot to think about.
It is, and just the beginning.
Yeah, it's definitely a lot to wrap our heads around. But hey, speaking of big bets and potential disruptions, let's shift back to Dubai for a moment. What makes it such a prime location for AI and Bitcoin mining? Is it all hype, or is there something more substantial driving this?
It's definitely more than hype. Dubai has a few key advantages that make it really attractive for these industries. For one, they have a very business-friendly regulatory environment. They're not afraid to embrace new technologies, and they've created a framework that really encourages innovation.
So it's like they're cutting through the red tape that you see in other places.
Exactly. They understand that to be a leader in these fields, you have to be agile, you have to be adaptable.
You're moving fast.
They are. But it's not just about the regulatory environment, right? Dubai also has the practical stuff figured out.
Yeah, I was just going to ask about that. Can they actually handle the massive computational power that's needed for AI and Bitcoin mining? I mean, that's a lot of energy, a lot of infrastructure.
They're investing heavily in it. They have access to abundant energy resources, which is key for these energy-intensive operations. And they're building state-of-the-art data centers and digital infrastructure to support all this growth.
So they're not just talking the talk, they're walking the walk.
Exactly. They're putting their money where their mouth is, and it's attracting some major players. We've already talked about IBM, Carib, Pantheon.
It's like they're creating a self-fulfilling prophecy, right?
Yeah.
The more they invest, the more attractive Dubai becomes.
Exactly. They're building this ecosystem that fosters growth and collaboration. They're attracting talent and investment from all over the world.
So it's more than just AI and Bitcoin mining.
Oh, yeah. It's blockchain technology, it's cloud computing, it's the metaverse. They're all in.
It sounds like they're building the city of the future. But let's be real for a second. Are there any downsides to this rapid technological advancement? What about the risks? It can't all be sunshine and roses.
Of course. Anytime you have rapid change, there are going to be challenges. Job displacement is a big one.
People losing their jobs.
As automation and AI become more prevalent, some jobs are going to become obsolete. That's just the reality, and it's something we need to address head on.
Yeah, we can't just ignore the human cost of all this progress.
Absolutely. We need to make sure that people have access to the education and training they need to adapt to this new job market. It's the only way to create a just transition.
And what about the ethical implications of AI? There are a lot of concerns about bias, privacy violations, and even the potential for AI to be used for harmful purposes.
Those are all valid concerns, and they're not unique to Dubai. As AI becomes more powerful, we need to develop ethical frameworks and regulations to guide its development and deployment. It's a global issue.
So it sounds like Dubai has a lot to figure out as they navigate this new frontier. But
Yeah.
it seems like they're committed to finding a balance between progress and responsibility.
They are. It'll be really interesting to see how they approach these challenges in the coming years.
It could be a blueprint for other countries and cities.
Yeah, a case study for the world.
Well, that brings us to the end of another deep dive. We covered a lot of ground today. We talked about inflation, Jerome Powell's crypto comments, the rise of Solana ETFs, the global debate over Bitcoin, the potential and the pitfalls of DeFi, and of course the exciting developments in Dubai. It's been a whirlwind.
It has. I hope you found it as insightful as I did.
The world is changing at an incredible pace, and the convergence of AI, blockchain, and crypto is shaping the future in ways we're only beginning to understand. So stay curious, keep learning, and don't be afraid to dive deep into the topics that spark your imagination. As always, there's so much more to explore. Thanks for joining us, and we'll see you next time for another fascinating journey into the world around us.